You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking to Eric Jacobson. Eric is the Director of Fixed Income Research for Morningstar. He's responsible for helping to steer the direction of Morningstar's editorial coverage of fixed income topics, mutual funds, and asset managers. Eric holds a bachelor's degree in political science, Hebrew and Semitic studies, and integrated liberal studies from the University of Wisconsin at Madison. And in fact, Eric is a frequent visitor and wannabe more visitor to Israel. So, Eric, it's certainly great to have you on the show here over the phone. How are you doing today?
Great. Glad to be with you. Thank you.
Appreciate it. Listen, maybe you could just start by telling us a little about what Morningstar's mission is. People see the Morningstar name all over the place. It's probably one of the biggest brands on Wall Street. But what do you do in the financial sector?
Sure. Well, it's interesting to note we just hit our, I think, 25th anniversary last year. And what's a little bit different about Morningstar is that the company was originally conceived and continues to revolve around this notion of serving investors and really looking at individual investors as our core constituency, regardless of whatever businesses the company is in. So delivering what we sometimes call a better investing experience ultimately for the end user is what we're all about. So we have a lot of different things that we do in terms of data and research, but the core philosophy and the core value of the company really is that it all needs to be with the furtherance of making sure that we help individual investors ultimately. And so that runs, I'm sorry, go ahead.
No, because I guess as an investment advisor, right? My day job is that I'm a financial advisor. I've got a company called Profile Investments here in Jerusalem. I deal mostly with individual investors, and I see Morningstar, I think, often from the professional side. Is there a retail side for normal people?
Right, absolutely, and yes, and the answer is yes. And the most common way that individuals access our work is usually through the internet or some other type of perhaps print subscription. We have a few things like that that are still pretty popular. But for example, in the U.S., Morningstar.com is our main pathway to individuals, and we now have sites all over the world that we're constantly developing in different local markets. And those are aimed primarily at individuals, and the content and the data is tuned mostly for that audience. But as you noted, we have a lot of different what we think of as products, I guess, but services, if you will, that are aimed at the advisor community, regardless of how their businesses are structured, to help them do a better job of helping their clients.
So basically, you're a research firm that researches investments and then makes it available to individuals?
That's right. So really, it's almost all audiences at this point. So in other words, what a lot of people who may have come across our name before in the past would think of as sort of this prototypical one-page report on mutual funds, and that was really the big flagship first product that we ever had in the mid-'80s. And it's really a comprehensive single-page report on mutual funds. And everything that we've done since then has sort of evolved from that. Those first clients were all either individuals or advisors usually. So now we have a whole line of things that we do for individuals. We have a whole line of things that we do for advisors, and we also license and sell data and software to all kinds of institutions. So, for example, whether it's a discount brokerage firm that you do business with, or even a mutual fund company that has a lot of data on its website or sends data out in its mailings, there are parts of our business that are separate from the area that I work in, of course, because we try to wall off those conflicts of interest if we do business with companies like that. But we feed that data and information to all these constituencies, so it can ultimately wind up in the right hands.
So specifically, what kind of investments does Morningstar cover?
Well, at this point, it's a really, really broad roster. We've expanded a lot. It tends to be driven by where we can get good data. And so now, it's a very, very wide spectrum that runs all the way from individual stocks. We actually cover corporate bonds now, mutual funds, any sort of managed investment that you can think of, whether it's a mutual fund or a closed-end fund. I know the terms are a little bit different in Europe, but variable annuities. My mind is almost escaping me at the moment, about separate accounts, if you will, where they're managed by not usually the separate account. Well, yeah, actually separate accounts themselves. So institutional money managers very often make those available in our database. We have a very large hedge fund database now as well. And the core philosophy behind all these things is really to shed light on them, help make them more transparent, and where the business case allows for it, for us to add analysis and sort of shine the light of analytics and analysis on it for the end users.
I see. We are talking with Eric Jacobson, who is the Director of Fixed Income Research for Morningstar. We've just been talking about transparency. So a couple of years ago, people obviously complained a great deal about the lack of transparency in certain fixed income products that were being sold on Wall Street, and perhaps led to a absolute meltdown of the banking system. Was Morningstar involved or aware of any of that, or were you guys just not in the market at the time?
Well, it's sort of a complex question, because so much of that was the transparency of what was happening behind the scenes in the hands of the investment banks, and they were building products and things that did not have any requirement for public disclosure. And frankly, the root of the problem to some degree was that it wasn't just folks like Morningstar and other public outlets that were lacking information, but the U.S. Federal Reserve and most of the governments around the world couldn't see through a lot of these things, and that was a really huge problem. And some of it, frankly, is political. People think of it as a weak regulation or a weak effort on the part of government, but here in the U.S. there was a huge effort to avoid the regulation and monitoring of derivatives, for example, and that was a big part of the problem. Does it mean that the government and the regulators couldn't see a lot of the risks that were building up? But that transparency issue that you talk about did in fact make itself all the way through to the mutual fund world, because there were certainly funds that were doing risky things that were that could be very, very hard to detect on the part of advisors and individuals as well. And that's something that we tackled as hard as we could, and I thought we did a reasonably good job of it. But we certainly came across funds that were the risks that they were taking were not really that obvious to their shareholders.
As a result of what you learned from what happened then, have you changed any of your procedures to dig in deeper?
Yeah, I mean, we're constantly trying to do that, and some of it is the way in the way that we relate to the mutual fund companies when we ask them for data. We're really trying to push forward very, very hard to get them to deliver data to us in better and different ways, in addition to what they file as a result of their legal requirements with the United States Securities and Exchange Commission, for example. We're asking them to provide us with additional data that can help us crunch the numbers better. We're also really strongly encouraging them to do a better job in describing what they hold and what their exposures are. And we're having lots of these conversations with regulators in the U.S., both the Securities and Exchange Commission, and there's a self-regulatory organization here in the U.S. that actually covers the brokerage firms and sort of by extension the mutual fund companies. And so there are a lot of conversations going back and forth among all of us, with us really trying to encourage as much as possible, somewhat through our bully pulpit of public speaking and writing, to get them to do a better job of opening up the information.
Mm-hmm. I see. I think it's very important to be able to do that on the one hand. On the other hand, if you're asking the fund companies for some sort of voluntary disclosure, I think they were blindsided also, right? They didn't know what to expect. So by asking them to tell you what they don't even see, I don't know who this goes to, but it would seem as though if they're not the ones capable really of seeing it in the first place, how can you rely on their testimony to you?
Well, part of what I'm saying is this. In almost every single case where a mutual fund wound up having a terrible problem in 2008, for example, the fund managers themselves absolutely knew how much risk they were taking. There was no question about that. They knew. The problem is that they either weren't talking about it a lot, and they certainly weren't publicizing it in their public disclosures. They weren't writing about it in their shareholder letters. They weren't providing charts and graphs in their materials saying, hey, look, by the way, this portfolio is using leverage, which, as you know, is like margin borrowing. And
I'm sorry, you're saying fund managers were using leverage but were not disclosing it?
Well, you could figure it out if you knew how to dig deeply into the financial reports, and especially with derivatives, it requires a tremendous amount of knowledge and agility to do that, and it's not an easy thing to automate necessarily. But so there were definitely funds that were using a lot of leverage in different ways, and they may have met the letter of the law requirement in terms of how they were disclosing their portfolios, but they weren't making it clear to their shareholders, and they were, in some cases, really not making it very clear to us either.
That's interesting. So you're saying they used some type of leverage, which I guess it may be beyond the scope of our last couple of minutes here.
Sure.
That wasn't really clear to anyone what they were doing. But when we're talking about leverage, we mean that they're with $1, they are controlling more than $1 worth of underlying assets, which creates greater volatility. Is that what was going on?
That's exactly the best way to describe it, because it's just a leverage game in all different forms. Some of it was with derivatives, and that's the hardest place to find it because it usually winds up in the footnotes.
Yeah, I guess you have to be a Warren Buffett to know how to really read all of the information. We're talking with Eric Jacobson, who is the Director of Fixed Income Research for Morningstar, which is probably one of the best-known names on the street being Wall Street, in investment research. I just want to wrap up with the last question, which is, on this show, we've spoken to a lot of behavioral finance people, from Dan Ariely, the author of the two best-selling books about investor irrationality. We spoke with the authors of The Invisible Gorilla, and we spoke, which is also a best-selling book, Dan Simons and Chris Chabris, and we spoke with the 2002 Nobel Prize winner in economics, Danica Kahneman, and they all spoke about the fact that investors just tend to make mistakes because they fool themselves and believe things that simply aren't true. If that's, and I mean, there's so much academic research to show that. One of the problems that we define it, or one of the terms we use, is sort of a media bias, or just people get overwhelmed with information. Morningstar is filled with information, and I've certainly heard people read it, and they read a few paragraphs, feel they know a lot, and then make bad investment decisions. Based on all of that, does it really make sense for people investing to be investing on their own, even with the help of Morningstar? Yeah,
it's a great question, and to be honest, I certainly don't mean to fawn at you, given that that's the work that you do. But that's really the way I look at it, is this: unless you have truly great confidence in your own learning and the work that you've done to learn about investing, and you do it with the same sort of attention and detail that you do to other sorts of big decisions. And I think that's a big area where people trip themselves up, is, here in the United States, people will spend 4 or 5 months deciding, what $25,000 or $35,000 car to buy, but may spend, 2 hours deciding what to do with, their retirement and maybe the $300,000 to $500,000 or that it may grow to be, or somehow, and that may really be important in their life, because in some cases it's just not interesting to them, or even if it is, whatever, they don't spend that amount of time on it. And my feeling is it's not rocket science. It is actually, for the most part, fairly simple, and the more complicated you make it, the more likely you're doing something that's too clever, if you will. But if it's not something that interests you, and you don't feel that level of confidence, I do, and Morningstar in general really encourages people to go look for an advisor they really feel that they can trust and that has their best interests at heart. Unfortunately, it's an area, it's a profession that attracts a lot of people who are much more interested in selling and things like that, rather than counseling their clients and doing good financial planning. But there are great people out there, and they should absolutely be a resource that people tap into if they don't want to do it themselves.
Okay. I think that's a good point. I always tell people that there are the 3 T's that they have to have if they want to manage their own money. They have to have time, the time to actually spend on doing it and keeping an eye on it. They have to have the talent, meaning they just have to understand what it is that's going on, and they have to have the temperament, meaning they just have to not get stressed out and moved to invest because of their emotions to either buy or sell, but rather have to have some sort of ability to step away and look at the big picture. But I think what you're saying is true, that if people don't have that, then they should work with an advisor. But I mean, I certainly have clients who are nearly professional and really do add a lot to the equation. Anyway, Eric, I just want to tell you, it's been very interesting. I'm sorry that we're just running out of time here, but we've been talking with Eric Jacobson, who is the Director of Fixed Income Research for Morningstar. Just please tell us, how can people learn a little bit more about Morningstar?
Sure. The easiest way, if you want to see the investment information itself, you can go to www.morningstar.com. If you're interested in looking at the company more broadly and what we have to offer, you can certainly go to our corporate website, which I believe is corporate.morningstar.com as well.
Okay. Okay. Once again, Eric Jacobson, thank you very much for joining us.
Glad to be with you. Thanks for having me.
Be well.
You've been listening to the Goldstein on Gelt show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt show.